Welcome to Talk Tickers, your essential briefing on the latest earnings calls. Today, we're taking a deep dive into the fiscal Q2 2026 earnings call from SailPoint. Our mission is really to cut through the noise, bring you those crucial numbers, distill management's strategic insights, and really understand what this all means, for the competitive landscape and SailPoint's future trajectory. You've likely seen the headlines, but we're going to unpack the story behind the numbers.
Exactly. And this quarter for SailPoint, it presented a really fascinating dichotomy, didn't it?
Yeah.
I mean, on one hand, strong headline beats, right, across the board. But then on the other, a notably cautious market reaction. So our goal today is to kind of unravel that divergence and really understand SailPoint's positioning, especially in this identity security environment that's just evolving so fast, particularly with AI, non-human identities. What's the market missing? Or maybe what are they seeing that's causing this disconnect?
That's the million-dollar question, isn't it? And we're going to tackle it head on. Let's start with those headline numbers first, because, well, on paper, they look stellar. SailPoint delivered an adjusted EPS of 0.07 cents. That comfortably beat the FactSet consensus of 0.04 cents. And revenue came in strong, too, $264.4 million. That's a 33% year-over-year increase, significantly above the $243.2 million consensus the street was looking for. These aren't small beats we're talking about.
Not at all. And the underlying metrics, they really reinforce that strength. Annual recurring revenue, ARR, hit $982 million. That's up a solid 28% year over year. And what's even more impressive, I think, is their SaaS ARR grew to $623 million. That's a remarkable 37% year-over-year jump. The company also reported, robust free cash flow, $46 million, and an adjusted operating margin around 20%, which, well, that's nearly a 10 percentage point expansion year-over-year.
Wow.
Yeah, that's a significant improvement in operational efficiency.
So, okay, on paper, a truly strong quarter. Lots to celebrate, incredible growth in recurring revenue, especially SaaS, big margin expansion. Yet, as you pointed out, and as many listeners probably saw, the market's initial response indicated something very different. Shares trading down pretty significantly after the call.
Yeah.
That reaction, despite this stellar Q2, it really throws a wrench in the typical narrative, doesn't it? It forces us to ask.
Yeah.
What exactly did the street miss? Or what did they see that we're not immediately picking up just from these numbers? Let's maybe peel back the layers on those financials first. What were the key drivers behind these impressive Q2 results, especially that big revenue beat?
Well, the company certainly highlighted robust demand across the business. They said Q2 was their largest new logo ARR quarter ever, primarily driven by SaaS. So that's a strong signal, right? Market acceptance. There was a specific nuance in the revenue beat that maybe caught some attention. A $7 million timing shift. Some federal term contract renewals originally expected in Q3.
Yeah.
They got pulled forward, recognized upfront in Q2. But it's important to note, this was purely a timing dynamic for revenue recognition. It had no material impact on ARR itself.
Right, because they were renewals already in the base.
Exactly, already firmly within their ARR base.
Okay, so if it was just timing, no real impact on the underlying health of recurring revenue, why do you think the market might have latched onto that detail? Is it just, a knee-jerk reaction? Or does it signal maybe a deeper sensitivity to guidance right now?
It's likely a bit of both, I think. The market's always scrutinizing future guidance.
Right.
And any mention of revenue shifts, even if explained like this was, can spark caution. But the underlying story here, I think, is really about the new business.
Right. You mentioned new logos earlier.
Yeah.
How is SailPoint not just capturing these new customers, but expanding those relationships? Are they just adding more logos, or are they adding better, stickier ones?
Oh, they're absolutely landing larger. That was a key theme. What's fascinating is they saw a 30% increase in the average ARR per new SaaS customer.
30%. Wow.
Yeah. This isn't just growth, it's quality growth, It indicates new customers aren't just signing up, they're adopting SailPoint's most fully featured high-value offerings right from the start. Many are opting for their Business Plus suite. Includes the advanced AI, automation, and also Cloud Infrastructure Entitlement Management, or CIM. Okay, hold on, CIM, let's just quickly define that for folks. Cloud Infrastructure Entitlement Management. Why is that such a big deal for SailPoint to have customers adopting it right away?
That's a great question, because CIM, it's really critical for today's complex cloud environments. I mean, imagine trying to manage access in this sprawling setup where thousands of different apps, services, even temporary functions are all trying to talk to each other.
Yeah, it sounds like chaos. Exactly. Accessing different resources. CIM helps companies tame that sort of wild west of cloud access. It ensures that in a multi-cloud environment, every user, every service, every machine only have the exact permissions they need, nothing more.
Okay.
And this is crucial because misconfigured cloud entitlements, they're a huge, increasingly common way for bad actors to get in.
Right.
So for SailPoint, it means new customers are immediately seeing the value in their most advanced, comprehensive solutions. That speaks volumes about the platform's stickiness, its relevance. And beyond that initial land, new SaaS customers had a 40% attach rate for their emerging add-on modules.
40%.
Yeah, things like non-employee risk management, machine identity security, data access security. That's way up from 25% in the same quarter last year.
Okay, so they're landing bigger and expanding faster within those new accounts.
Precisely. It demonstrates not just initial land, but a really robust expansion capability for their higher value specialized stuff.
That's great context. Now, here's where it gets really interesting for me, I think. Beyond these financials, what were the major strategic themes management emphasized, particularly from the CEO? What's the underlying strategy here? Is this a reaction to market pressure, or are they trying to proactively redefine the whole identity security landscape?
Oh, it definitely feels like a proactive move. Management focused heavily on accelerating identity security demand, right? Pushing for that continued shift to a SaaS mix, achieving stronger operating efficiency. Those were key pillars. But the CEO articulated this vision where identity is seen as absolutely crucial for solving, full-fledged security challenges, anchoring everything in deep governance constructs. We're talking about moving beyond just static controls to real-time dynamic enforcement.
Right.
Which is especially vital now with these entirely new classes of risk from AI and machine identities proliferating.
These new classes of risk, we hear that phrase a lot. Can you maybe elaborate a bit? What are these new risks from AI and machine identities? How are they fundamentally different from the human identity risks we've traditionally focused on?
Yeah, it's a massive shift. Think about it this way. For decades, identity governance mostly focused on humans, right? Who can log in? What can they access? What happens when they leave the company?
Yeah.
Pretty straightforward, relatively speaking.
Okay.
But the rise of machine identities, all the bots, automated scripts, cloud services, microservices, and now these sophisticated AI agents interacting within an enterprise, it's just exploded. Unlike humans, these machines, they don't have HR records, they don't take vacations, and they can multiply at an incredible rate. Managing their access, their identity becomes exponentially more complex. It represents this massive new attack surface if it's not governed precisely. They need the same, maybe even more stringent controls than human identities, but you have to do it at machine scale and speed. And that's the problem SailPoint is really positioning themselves to solve.
That's a powerful distinction. So it's not just managing more users, it's managing entirely different kinds of identities with different behaviors, different risks. The CEO also talked a lot about the intersection of identity, data, and security, called it a trifecta. Can you maybe paint a picture for us? What kind of threat might a security company miss if they only have the security and data context, but they lack that crucial identity piece?
Absolutely. The CEO really hammered this need for the trifecta: identity, security, and data context. So imagine a security tool detects a strange data access pattern, let's say a large download from a sensitive database.
Okay.
They'd have the security alert and the data context, what was downloaded. But without the identity context knowing who or what accessed it. Was it a person? A service account? A new AI agent someone just deployed? And why did they have access? Was that access even legitimate? Without that identity piece, it's incredibly hard to tell if it's a real threat or just, a normal operation. SailPoint believes their 20-year foundation gives them this unique contextual understanding. They manage over 125 million identities across 3,100 customers.
That's a lot of context.
Exactly. They built this deep intelligence. And to tackle the AI challenge directly, they also tease this upcoming launch, Agent Identity Security, instead one. They'll unveil it at their Navigate conference. It's designed specifically to govern AI agents and sub-agents across their entire life cycle. And importantly, it's powered by their existing policy engine.
So this policy engine, can you unpack that a bit? What does it actually do that makes it so vital for managing these new AI identities?
Yeah, think of the policy engine as the brain, the central nervous system that enforces all the rules. It takes all those questions, who, what, when, where about access, and it applies predefined policies or even dynamically learned ones to make sure every single identity, whether it's human or machine, is operating strictly within its authorized boundaries.
Okay.
For AI agents, which can be autonomous and change rapidly, this engine becomes even more critical. It ensures an AI agent, given a task, doesn't suddenly, grant itself new permissions or perform actions way outside its intended scope. It's really the foundational layer for automated, scalable, and secure governance for all types of identities.
That makes perfect sense. So, given this growing complexity, what about their efforts to simplify things for customers, especially with enterprises grappling with, more applications than ever before?
Yeah, that's another key area. They introduced something called accelerated application management. It's aimed at transforming how enterprises discover, govern, and secure applications at scale. That's a huge pain point for lots of organizations.
Definitely.
And this offering, it's going to be further enhanced by their acquisition of Savvy's assets. That's expected to significantly boost their application visibility and identity risk detection capabilities. And this isn't just talk. They showcased it with some compelling examples, like a leading tech company where machines now outnumber human identities 20 to 1.
Wow, 20 to 1.
Or a Forbes Global 2000 auto manufacturer managing thousands of critical applications. These real-world cases underscore the platform's ability to handle these incredibly complex, evolving identity landscapes with practical, scalable solutions.
Okay, so bringing it back. We have a strong Q2, impressive growth in key strategic areas, this really forward-looking vision around AI and machine identities. Why then did the market react with such caution? This is the core question, right? Were those concerns truly warranted, or was the market just looking in the wrong place?
This is where that short-term market behavior often diverges from the longer-term strategic reality, I think. While SailPoint did raise its full-year 2026 revenue guidance to $1.052 billion to $1.058 billion, and adjusted EPS to $1.20 to $0.22.
Which sounds positive, right?
But the immediate market focus was squarely on the Q3 outlook. Their Q3 revenue guidance, $269 million to $271 million, came in below the street consensus, which was around $277 million. And the adjusted EPS guidance for Q3, those are 5 to 6 cents, was also slightly below consensus. So this near-term perceived softness, it really overshadowed the full-year raise and created that market caution we saw.
Okay, so what does this imply for the second half of the fiscal year then? Is the market potentially missing the forest for the trees here?
I kind of think so. Management sounded extremely confident, particularly around generating approximately $85 million in free cash flow just in the second half of the year. Heavily weighted towards Q4, mind you.
Okay.
And they explicitly stated that the Q3 guidance reflects both that $7 million revenue timing dynamic from Q2 and planned strategic investments. These aren't just random costs. These investments are specifically for new product launches at their Navigate conference, like that agent identity security we talked about.
Right.
And scaling their go-to-market engine, getting ready for fiscal year 2027. So it suggests a very deliberate strategic decision. Invest now for future high-value growth, even if it temporarily tempers the near-term Q3 outlook a bit. It feels like a classic case of market short-sightedness, maybe disproportionately penalizing a strategic investment cycle aimed right at capturing that future growth.
That's a crucial distinction for anyone trying to reconcile the strong quarter with that muted market response. Let's shift gears slightly. Consider the broader investor context. SailPoint operates in a fiercely competitive, rapidly evolving space. What's the relevance of these announcements, the strategy, for the wider identity security sector? What signals should investors be picking up?
Well, what's truly fascinating here, I think, is the clear strategic pivot towards governing machine identities and AI agents. Management is signaling loud and clear. The traditional understanding of identity governance, focused mainly on human users, is just inadequate now.
It's not enough anymore.
Not nearly enough. Machines, AI agents, they're proliferating at an unprecedented rate. This creates this massive growing attack surface that conventional solutions just aren't equipped to handle. It reinforces the critical need for specialized, deep governance platforms like SailPoints. It's not just an incremental improvement they're talking about. It's a fundamental redefinition of what identity security needs to be. And this acceleration of legacy modernization, partly spurred by the urgency around securing AI. That's another key signal for the whole sector. If you're an identity vendor not thinking seriously about machine identities right now, you're already falling behind.
And they did address the competitive landscape directly, too. It's definitely a busy market, new players popping up. Is there any risk that as these new entrants mature, they start creeping into SailPoint's core mid to large enterprise territory? How strong are their competitive moats, really?
Yeah, they address that. While acknowledging some noise from new entrants, particularly maybe at the lower end of their enterprise market, management asserted pretty firmly that for the mid to large enterprise deals, the deals they really focus on, the competitive landscape remains largely unchanged.
Okay.
SailPoint continues to maintain strong win rates in these complex, high-value accounts. Their differentiation, they argue, comes from focusing on bringing identity and data together, integrating that deeply across the whole security ecosystem.
Identity and data specifically.
Yes. Contrasting that with competitors who might emphasize identity and threat, or maybe just act as an aggregation layer for various point solutions. SailPoint maintains that true enterprise-scale identity security needs deep expertise. It needs that foundational policy engine. It needs rich contextual understanding, not just a consolidated dashboard. Their 20 years in this specific space gives them a significant data and experience advantage, they believe.
Makes sense. And what about macro headwinds? We've certainly seen plenty of economic uncertainty, geopolitical stuff. Is any of that impacting SailPoint's sales funnels?
Apparently not significantly. Management stated they haven't seen a material impact on their funnels from macro uncertainties or tariffs. They attribute this resilience primarily to identity security being seen as mission critical. It's not a nice-to-have investment for enterprises anymore.
Right, it's essential.
Exactly.
Yeah.
In today's threat landscape, robust identity governance isn't something companies feel they can just cut back on. It's foundational to their security posture, to compliance, even to enabling innovation securely. That, coupled with their diversified growth strategy across different industries, suggests the fundamental need for what they do tends to override broader economic concerns for their target customers.
Okay. All right, well, it's time now for our This Is Not Financial Advice segment. This is where we pitch an outrageous but plausible trade idea based on today's deep dive. What have you got for us?
All right. So given the market's clear short-term focus on that slightly light Q3 guidance, which, as we saw, led to an immediate share price decline, yet contrasting that with SailPoint's very clear strategic positioning for the long-term focusing on AI agent governance, accelerated application management. Here's thought. Trade idea. Initiate a tactical long position in SailPoint, SAIL, right after this kind of overreaction. The thesis is the market is disproportionately penalizing a strategic investment cycle aimed squarely at future high-value growth.
Okay, going long on the dip.
Exactly. And simultaneously, you could consider a pair trade. Go short, more traditional, perhaps more access-focused identity peer, one that has less demonstrable capability or focus right now on AI agent governance specifically.
Interesting. So playing the relative value based on future positioning.
Precisely. SailPoint looks uniquely positioned, I think, to capitalize on this next wave of identity security, the wave driven by AI and machine identities. That presents a far larger, potentially stickier problem than just traditional human identity governance. So the Q3 dip, driven largely by that timing shift and these strategic R&D investments, could create a compelling entry point for this relative value play, a play on a company poised to really dominate what you might call the everything identity market. This isn't just another software upgrade cycle. It feels more like a fundamental architectural shift is underway, and SailPoint is busy building the foundation for it.
That's a bold call. Definitely fits the outrageous but plausible bill. Let me play devil's advocate for just a second, though. What's the biggest risk to that long position, particularly if, say, those Q3 investments don't pay off as quickly as management hopes, or if a competitor does manage to pivot to AI identity governance faster than expected?
Yeah, fair question. The primary risk is always execution, right? That these investments take longer to yield results than anticipated, or that broader market conditions unexpectedly worsen, impacting enterprise security budgets more than they currently see.
Yeah.
However, given the mission-critical nature of identity and the sheer pace of AI adoption, the need for these advanced solutions isn't really diminishing. If anything, it's accelerating. And SailPoint's 20-year head start in deep identity governance, with its established policy engine, its huge customer base providing data, it makes it difficult for a new entrant or even a legacy player to just pivot overnight and replicate that depth.
It's not just flipping a switch.
Exactly. This isn't just about building the tech. It's about scaling it effectively and integrating it deeply into these incredibly complex enterprise environments. That's where SailPoint has historically excelled. So yes, the risk is there. Execution risk always is. But the potential reward from being at the forefront of this major architectural shift seems substantial.
Outrageous. Definitely plausible given the context you've laid out. And of course, remember everyone, this is absolutely not financial advice. Do your own research. So, Okay, to bring it all together then, SailPoint delivered a truly strong Q2, beat expectations on both EPS and revenue, highlighted significant growth in ARR, especially the crucial SaaS ARR, and they raised the full-year guidance.
Right. But a cautious Q3 outlook, which seemed influenced by both timing shifts and those important strategic investments in innovation like AI agent governance, that led to immediate market caution, despite management sounding pretty confident about the second half. So the underlying narrative here reveals a company that's rapidly adapting to this AI-driven identity security landscape, focusing on deep, extensible governance for absolutely all identities, human, machine, and these new AI agents. It'll be crucial, I think, for you, our listeners, to really distinguish between that short-term market noise and the longer-term strategic positioning that SailPoint appears to be executing on. Are you investing based on the next quarter's guidance miss or the potential landscape of the next decade of identity security?
Well said. We hope this deep dive into SailPoint's earnings call has provided you with some valuable insights for your own research and investment thesis. We always encourage you to continue your own due diligence and stay informed.
As always, thank you so much for joining us on Talk Tickers. We really appreciate your engagement and would love to hear your thoughts on today's discussion.